Welcome to the newest season of Nirvana with Nivesh, your gateway to the world of finance. I am your host, Ishan Arora, and this podcast aims to help you navigate the world of finance with Nivesh. Before we delve into topic of today, let me introduce Nivesh, the finance and investment cell of Sri Aurobindo College. Nivesh aims to facilitate knowledge sharing on finance and provide deeper insights into the financial sector for everyone. Today's session will focus on Budget 2024, an essential document that shapes the financial and economic landscape of our nation. It impacts every sector, influencing policies and decisions that affect us all. It is my pleasure to welcome you all to this insightful session on Budget 2024. We are honored to have with us today Mr. Anupam Raj, a distinguished Deputy Secretary rank officer from the Indian Ministry of Finance. Mr. Anupam Raj is currently in charge of the FMMI vertical of Indian Treasury within the Ministry of Finance. His extensive experience spans government budgeting, cash and debt management policy, financial technology, and digital payment systems. He has also contributed significantly to the treasury, accounting, and audit functions across various ministries and has worked with the International Monetary Fund on several global assignments. Now, let's welcome Mr. Anupam Raj.
Thank you. Thank you, Ishan.
Okay, sir. So we shall be starting now. So before getting into the nitty-gritty, sir, could you give us a brief explanation of what a budget is and what are its primary functions?
Sure. So I'll keep it simple and then talk the legality and the economics part of it. Budget to us, even for me before joining the government service, and this is actually quite true for quite a lot of our citizens. It is basically a speech which is given in the parliament by the Honorable Finance Minister every year. And then on the next day in the newspaper, you get to see a pie chart in the shape of a 1 rupee coin, and you get to know where the rupee is coming from, where the rupee is going out, and you see a tabular structure. Okay, what are the things which are going to cost more? What are the things which have actually gotten cheaper? But budget is actually much more and goes much beyond that. So budget has a constitutional derivation. The Article 112 of the Indian Constitution speaks about the annual financial statement, which shall be caused to be laid in the Parliament by the President of India. And this annual financial statement is actually the budget. And it's not a single document. It's a compilation of 15 different documents, some of which have constitutional mandate, some of which statements pertaining to the FRBM Act, which have a legal regulatory mandate, and some are more conventional and are supporting documents, elaborative in nature. So budget basically is going to give you the estimation of how much the government plans to spend over the coming financial years. What are the key focus and priority areas of the government? How much the government is going to spend for what purpose? How much was spent in the past year, the previous year? There is an expenditure summary on that. And then there are outcome and output statements as well. What was achieved as an outcome and what was the output for the money which has already been spent by the government. And of course, there are other host of documents. So basically, if I have to summarize it all, I would say budget gives an effective control to the legislature over the executive of the country. The legislature being the parliament and the executive being the government. So the legislature actually is approving a proposal of expenditure for the coming year, which is put across by the executive to it. And then a mechanism or an oversight happens. And in the process, budget also acts as the primary instrument of fiscal policy implementation for the executive, which is the government. And then there can be derivative areas such as monetary policy, welfare programs and schemes. So budget goes much beyond our traditional understanding or traditional sense of just a speech or just a pie chart, but it's a lot more. It is basically the financial skeleton of the government functioning.
Okay, sir. So the budget 2024 was introduced just few days ago. So how does the government intend to enhance the earnings of every citizen through this budget?
That's a very interesting question, you know. Let me explain that with an illustration. So let's say you are in college and you get a campus placement out of your college. Let's assume your starting salary is like 1 lakh rupees per month. And this is what you are getting when you are passing out in the year 2024. So your aspiration as a citizen, as a hardworking citizen, as a tax-paying citizen would be to make gradual progress as to what is your take-home salary and how much is it worth. Okay, so I'll just explain it in simplest terms and then I'll relate it to the budget. So let's say you are getting an annual increment of 10% every year over the next, and let's say it's a simple interest, it's not compounded. So maybe 10 years down the line, you start making 2 lakh rupees per month. So we are now in the year 2034. But since you're all having finance and economics background, you would appreciate the concepts of time value of money and inflation. So what you are making today in 2024 as 1 lakh rupee per month has to actually be inflation adjusted if you actually have to look for a growth in the year 2034. And how is this inflation adjustment going to be? How is this inflation going to be controlled? So that is going to happen through monetary policy. And then where is the guidance for that monetary policy implementation coming from? That is coming from the larger fiscal policy, the macro fiscal objectives of the government. And that is how the budget is coming into picture, because the budget is the actual statement of all these policy areas which we are talking about, which is elaborating on all these topics. And that is how the various welfare schemes of the government, the various capital projects of the government, the infrastructure projects which we are talking about, these are actually meant for giving life opportunities to our citizens to actually better their lives, to actually move our country closer to attaining the sustainable development goals, which are 17 in number, spreading across various areas. So this is how the budget is actually looking to take care of the citizens' aspirations, and in the process also take care of their economic aspirations of having more money to take home to from their workplaces. I hope I was able to explain, or if there is some point which you would want more clarity upon, I would be very happy to touch upon.
Yeah, sure. It was very clear. So moving on to my next question, there has been a lot of criticism around this, but there was removal of indexation, which has affected the real estate market. So, what is your take on that? And do you think that it should be applied again or not?
You know, as serving government officers and that too in Ministry of Finance, my opinion hardly counts, but I'll speak on the facts. So while this has been done away with for the time being, let us also understand what indexation is basically. So indexation is nothing but taking care of inflation and time value of money, something we already touched upon. So let's say I'm buying a property in Noida today, which is worth 50 lakh rupees. It's a 2 BHK flat or something. And I intend to sell it maybe 5 years down the line. And the money which is going to come into me 5 years down the line is 75 lakhs. So my gain on that is like 25 lakhs. So now my initial cost, what the government has done by removing indexation is, had you factored in indexation, your initial cost price of 50 lakh would be adjusted for inflation in the year in which you are actually making the sale. So it might actually come to 72 lakhs. So my actual profit might have been 3 lakhs only. But then by removing indexation, your actual profit turns out to be 25 lakhs. So this is the impact which is going to be in the real estate market. But then the tax rate on the capital gains tax has also been brought down from 20% to 12.5% by removing the indexation as well. So these are the factors which are going to impact it. But as you would be aware through some media reports also, there is a concept called grandfathering. So wherein there would be a cut-off time period defined, maybe July 2024 when the budget has been announced and the budget has been laid in the parliament, or maybe August 2024 when the budget is actually notified and implemented. And any transactions which have been made up to that cutoff point would be allowed to be inflation adjusted, and any transactions which are being made after that might not be allowed to be inflation adjusted. There is also a possibility that the citizens are given a choice that either you do an inflation adjustment with the previous tax rate or you do not do an inflation adjustment with a new tax rate, something which we see already in the income tax regime, where we have a new tax regime and old tax regime, where in the old tax regime you can actually go ahead and define a lot of savings such as your PPF, your small savings, your expenditure on medical, and all those exemptions are there. But in the new tax regime, you do not see all these things. It's a flat, no deduction kind of a thing, which is with just a standard deduction. And then you go about getting your tax rate calculated in different slabs. So something like this is also a possibility, but that is something still under contemplation. Let's see how that turns out to be.
Definitely, sir. So, our finance professors have always taught us that we should start investing early, right? So, but recently there was an increase in STT, Securities Transaction Tax. So, what do you think this will have impact on the trading environment? And like for the young people who are just starting, there's a lot of risk involved. So, how should they move forward with it?
Okay. Actually, this is something which would be very relevant to all of us. We see more and more people trying to get into mutual funds, lot many advertisements on the television coming in, and the tagline being mutual fund sahi hai. So this is the time to start investing in all that. And with more and more people, we have a very large base of our population who are associated with the service industry, and therein the with readily access to computer and internet, mobile internet, the intraday trading is also gaining a lot of traction in the country. So let us first clarify what are the options for trading when we go about investing into these things and where the increment in STT has been done. So this increment in STT is applied at different rates on different kinds of tradings. So let's say you are investing in some mutual fund, there is a different rate applicable. If let's say you are doing some intraday trading, there is a different rate applicable. The increment right now, which we are talking about, is applicable only to the FNO market, which is the futures and options markets. Now, what are these? These futures and options are actually your commitment to invest on a future date at a rate or at a price or at a premium which you are zeroing down upon today. But the actual investment would be happening on a future date. Now, this itself is something which is usually not very popular with citizens who are just getting into personal investment purposes. These are more for institutional investors, and these have a higher degree of risk involved as well. So as far as people like you and me are concerned, where we have to do intraday trading or we have to do mutual fund investment, not much is going to change. But for the F&O market, where there is a greater degree of risk, of course, there is a greater degree. The futures, the tax rate has been made to approximately 0.06%, and the options are maybe from 0.01 to 0.02. It has been doubled. So, of course, there is going to be an impact, maybe, but more revenue for the government.
Surely, sir. So, sir, given the budget's focus on the MSME and their growth, what role do these industries play in growth of India, and what is the future of these industries? If you could explain that.
Sure. MSMEs actually form a very crucial part of our economy as a whole. As you would appreciate, uh, we have several countries within India. I would not even go and say states and cultures. There is an India, there is a Bharat, and there is a Hindustan. So there is a great disconnect. A large part of our population is still rural based, and there are remote areas which are geographically difficult to reach, or even areas which are not geographically difficult to reach, but the development or the growth has been in patches. If you go across some of the northern states or the eastern states, the pace of development has not kept up across the geography of that area. So let's say IT hubs in the country, service sector. So that has maybe taken off in areas like NCR, where we have hubs like Gurgaon and Noida. It has taken off in areas like Bengaluru. It has taken off in areas like Hyderabad, Chennai, Mumbai, but not so much for a tier two city like Patna or Ranchi, for that matter. Or if you go further northeast, maybe not at all in Guwahati or Shillong. So how do these places, and the same is for industrialization, the manufacturing sector. So these are mostly still, I would call secondary or tertiary kind of sector, which are existing there, which are relying heavily on the rural economy and the rural background. And this is where MSME sector plays a very important role, because there is no large inflow of capital happening in these geographically laggard areas or economically laggard areas, economically laggard geographies. So MSME basically is small scale industries such as coir industries or Khadi Gramodyog, which are success stories in the country. So these are MSMEs are actually the driving forces of economy, which would actually balance the economic growth for the country. And the government has been working since a long time to incentivize these. If you look at the government's procurement policy, government actually encourages for all the procurement it is doing to actually be done from these MSMEs. It is also incentivizing these MSMEs to come ahead and bid into government tenders and supply government goods and services. How does it do that? Government is doing that by waiving off the security deposit for them, by waiving off the earnest money deposit for them, by relaxing the norms of procurement for them. So it's a holistic approach actually to have a inclusive growth across the length and breadth of the country for some of the geographies which may not have taken up or may not be part of the success story that is India. So for them to come up with it, the success of MSME is very paramount and important. And that is why you would see across successive budgets, and that is across the years, MSME has been a focus area, and no government can actually turn its eyes off from this sector.
Okay, sir. So this makes me think upon the fact that if you could explain which all schemes the government is focusing for the growth of MSMEs and how how are they promoting them instead of the larger MNCs which are coming to India? If you could reflect upon that.
Sure. I'll speak with an example. Let's again take the example of government procurement. While there is a dedicated Ministry of MSME and there is Department of Industries who have various welfare schemes in which government is incentivizing or subsidizing the production for these MSMEs, or actually helping them out through various kinds of procurement incentives or assured procurement kind of things. But let's say a regular procurement which has to be made in my office, and that is for a furniture. So what I would do is I would publish a bid or a tender saying I require a table of size, let's say 3 feet by 5 feet, and I require a chair of the size this, let's say, full length chair, full back support, which can be pushed back and everything. Now, if I'm publishing these specifications on the government procurement portal, I would be asking the criteria. I would only be looking for serious bidders. I cannot have fly-by-night vendors who are coming in, putting in a bid, quoting some unrealistic amount and running away when it comes for delivery. So I would be defining some criteria. I would say, okay, the company or the vendor who is going to provide me with this furniture must have minimum of this much amount of turnover, must be making this much amount of sale. He or she must have supplied to these many government entities in the past. So this is going to be my general criteria. But I also have to take care of the MSMEs who are into the furniture production business. So what I would do for them is I would go ahead and relax these criteria. So if my annual turnover criteria for any normal company or a multinational like Durian or Godrej is for 500 crore rupees, I would say for MSME that hypothetically speaking, that criteria is 50 crores only. if I am taking a security deposit from a bidder who is bidding for a table of durian and a chair of durian, chair produced by durian, I am taking a security deposit of, let's say, 10,000 rupees. I might waive it off totally for the MSMEs. So this is actually to incentivize these MSMEs to produce more, to supply more, and to get the economy running. So this is just one example of how the government is doing. And similarly, there are n number of welfare schemes also operational where government is actually working to incentivize these MSMEs.
Okay, sir. I guess this sector would not need any more explaining. Our viewers would be quite happy with all your answers. And thank you for answering all these questions with so much depth. Before moving forward with the question, if you could explain your career growth and what is your role in the ministry, because many of our audience also includes finance enthusiasts who literally aspire to be at one of the positions in the government, especially in the Ministry of Finance. So it would be great if, like, before moving forward, if you could let us through that.
Sure. So I come from an engineering background. I did my bachelor's in engineering in mechanical engineering, and I passed out in the year 2008 from Manipal Institute of Technology in Karnataka. Post that, I worked in the IT sector for close to 2.75 years. Then I decided to appear for civil services. I cleared it in my first attempt. That was in the year, the exam was 2012. So I'm from 2013 batch. That ways, I joined in 2013. So I belong to a service which is called Indian Civil Accounts Service. Now, this service is basically representing the treasury of the Union Government of India. There is an Office of Controller General of Accounts in the Ministry of Finance, and it is performing the functions of treasury of the Union Government with add-on functions such as internal audit, accounts, bank reconciliations, settlement with the Reserve Bank of India, responsibility for the cash balance of the consolidated fund, the public account, and the contingency fund of India, and reporting against them. And of late, also the work of budgeting has been entrusted to our field officers. So for this, actually, this is a very niche area of finance. If you talk of larger finance and economics, this, when it comes to government, it's a domain which is called public financial management, PFM. So this is a domain of PFM where you have to do with the budget and all the associated processes, from right from the budget formulation to budget execution to budget reporting, accounting against the budgeting and evaluation, and then the cycle for formulation starts. So this is what the job is about, and this is the role in Ministry of Finance, basically. But actually, for someone aspiring to come into a position like that, of course, you'll have to appear for civil services. This is a generalist position. It's not like for some of specific services like economic service or statistical service, you need to have a graduation degree in economics or statistics, or a master's in is preferable in those subjects, and then you appear for an exam. Similarly, for engineering services, you need to have a BE or BTech from some recognized college or university in some specific disciplines. Similarly, there is forest service, which is allowing. But for civil services, it's a generalist kind of a thing. All you need is a bachelor's degree, or you might be appearing for it. And there are a host of 23 different services which you can apply for and get in. And once you get in, actually in government, it's more of hands-on learning. You are taught in classrooms and you're taught the concepts and things. For me, finance was not totally new because I had the option of electives in my during my engineering, and at that point of time, I was fascinated by finance, so I took quite a lot of financial management papers and bookkeeping papers as electives. So for me, almost one semester of my engineering was like this. Of the 4 years, I was in engineering college. But even for the people who are not from finance or engineering background, the training is quite comprehensive. Once you get in, you will get into the groove of it. And even if not, then once you are thrown out to work in various ministries and departments or MOF, you will definitely get to know how to do, what to do, and when to do, of course.
Totally, sir. That was quite an inspiring change, and it was great to hear about your story. So now, getting back to the budget, there has been a saying by the government that they will try to keep the fiscal deficit at a low of 4.5%. But considering the potential economic constraints and challenge, do you think this figure is possible to attain?
Yeah, it is definitely possible to attain. Let me also introduce you to a few concepts of public finance, because fiscal deficit has a direct linkage and derivation from these things, which is called cash management and debt management. So cash management basically is at any point of time, because let me also explain this. When I say I have an annual budget outlay in India for 45 lakh crores of INR, it's not like that on the 1st of Feb, the finance minister is standing in the parliament and announcing the annual budget outlay is 45 lakh crores. So somewhere in RBI, in some hidden chest or some underground locker, they're stashing away this much money and it's lying there. No, it does not work that way. That is why the concept of cash management, because this budget is called a budgetary estimate. It's an estimation. That estimation is amounting to 45 lakh crores. So this much money the government intends to spend during the year on various purposes. Now, how is the money going to come from? There is also a estimation of receipts being done. So at any point of time, I have to spend something, some amount which is in commensuration with the money which I actually have. Now, how do I have this money? I have sources of revenue. I have taxes, I have non-taxes, I can have capital receipts. Now, capital receipts can be of two types. I can actually be selling my stake in some PSU, and that can be a capital receipt for me, or I can have some debt by issuing of government bonds and securities in the market, and that would also be a capital receipt for me. And this issuing of bonds and securities, these are the components which are actually comprising of the fiscal deficit. So now, at any point of time, if I'm able to better explain that how much cash is lying with me in my book of accounts, actually lying with me, what is my projected expenditure, I can better manage this issuing of bonds and securities. It can be more realistic. I cannot under borrow or over borrow. So a better cash management is leading to a better debt management. And this debt management, if done in a better way, in a more prudent manner, it is going to bring down the fiscal deficit effectively. Now, this is just one way of doing it. There are, of course, other ways of cutting down on the revenue expenditure, which is non-productive expenditure. Of course, there is one more angle to it, which is a recent development where we saw what happens is a large part of our budget is funds which are going to the state governments for various welfare schemes which they are implementing, but government of India is funding a portion of it. So let's say it can be a ratio of 60-40, where 60% is funded by government of India, 40% by the state, or in case of special category states, it can be a ratio of 90-10, where 90% is funded by government of India and 10% by the concerned state. So in those scenarios, what happens is when we are giving away our share of 60% or 90%, we are calculating it as a revenue expenditure for us. Whereas it can actually be a capital asset creation in the state under some welfare scheme in the state. So this concept has actually led to a thought of a new definition of effective revenue deficit, of whatever money we are spending, how much of that revenue expenditure is actually going ahead and creating capital assets. So with ideas like that, our expenditure, our revenue expenditure is getting more, I would say, disciplined, more efficient, so to speak. And of course, with effective cash and debt management, we are moving towards the targets of FRBM, which we should be achieving.
Thank you, sir. That was a lot of information indeed. Um, so, as you know, that the corporate tax for international companies have been reduced from 40 to 35%. How do you think this will benefit the country? And add on to that is that how would you compare it to China's corporate tax rate that is of 25%? Don't you think that the government should have reduced the corporate tax even lesser to promote uh, more MNCs coming to India so that there is a boost both in employment and growth of the country?
So let us first understand how this corporate tax rate works for foreign MNCs which are operating in India. Now, this tax rate lowering is going to be applicable only for countries which are operating directly under their international name or international registration. Now, there can be companies which have Indian subsidiaries, which are registered in India, and they are operating as the Indian arm of these MNCs. So, this lowering of the corporate tax rates is not going to impact them. Now, coming to the companies which are directly operating under the control of their foreign controllers or foreign stakeholders. For them also, earlier it used to be two rates of taxes. For companies which were having a permanent establishment in India, they were having a higher tax rate. And for companies which were not having a permanent establishment in the country, they were having a lower tax rate. Now, this was actually incentivizing these MNCs to not have a permanent establishment in India, come in, get some small work done, move out. And that is why you would see companies which are into infrastructure development or construction were actually operating in this mode. Now, with the new tax declaration in the budget or the new rate declaration in the budget rather, what has been done is this distinction between a permanent establishment and non-permanent permanent establishment has been done away with. So effectively, it is going to actually create an environment of ease of doing business in the country, and it is going to attract more and more MNCs to come here and operate. It is going to be a flat rate. The red tape has been removed of this distinction and everything, and that is how it's going to be going ahead. It's going to be, of course, beneficial. Now, when you compare it to China, of course, China has a better fiscal position than it is in a better fiscal position than we are. For that matter, you can actually look at lot many countries which do not have income tax at all. But can we afford at this juncture at which the economy of the country is to do away with that chunk of revenue for the country? No, we cannot. So lowering of corporate tax rate and matching it with China for having a competitive advantage, of course, there are going to be gives and takes in this argument. So for us, actually having a flat rate, ensuring ease of doing business, we should be looking at these pluses which have been introduced now.
Wow, sir, that really enhanced my view. It had broadened my viewpoint, and I am sure that the viewers of this podcast will also would be happy to know something new. Okay, so moving on, the government had also introduced that they shall be providing 1 crore internships to the youth over the period of 5 years in the top 500 companies, which
Yes.
almost averages about 20,000 interns per company per year in the top 500 companies. So,
Yes.
do you think this move is practically possible?
Of course, if the government has announced something, there has been a lot of feasibility and a lot of thought and rationale which has gone behind it. So let's not talk about the feasibility of it all. If it is announced in the parliament, of course, that's a given. That feasibility analysis has been done. It's doable. Let's talk about the boundaries or the parameters of operations here. So we are talking about top 500 companies, market capitalization wise. We are talking about 1 crore interns in a period of 5 years, and we are talking about a one-time incentive of 6,000 to each person and a monthly incentive of 5,000 rupees to each person. And the corporates are allowed to book 10% of this amount into their CSR. Rest of the money is going to be provided by the government of India. Now, this is actually going to be a big boost for the economy. You have to look at it from this way. We are going to have a huge skilled workforce in the country once this kind of scheme is operationalized. Because by virtue of working with these large companies, and we are talking about the 500 top companies of the country, according to the market capitalization. So these are not companies which would just let you sit down, take the money home and not do any work, not teach you how to work, or just let you have the money for no productive reason at all. These are the companies which are going to grill our youth, train our youth, and actually turn them into productive workforce who are skilled, who are employable, and which in turn would they are actually creating a supply for their own demand. Can you see the equations meeting here? So this is kind of there is a constant complaint coming in from lot many countries that despite having a demographic dividend, ever growing rate of literacy in the country, a large number of youth is not employable in the country. It also has to do with the mindset that most of the youth are looking for white collar jobs, or they are looking to get rich overnight and things like that. But if you're actually looking to progress, and the youth are actually looking to skill themselves, this is a great scheme which would actually lead to a large workforce which can be employable by these MNCs, and not just these top 500 across the economy. Any company would be actually very happy to employ someone who has experience with such things. Now, having said all these things, the scheme is still under this discussion. The Ministry of Corporate Affairs is still holding discussions as to how the operational parameters actually for implementing this scheme is going to be. And for that purpose, they have started inviting the ministries, the companies, several companies from these top 500 into the ministry, and they talk about the operational boundaries and parameters and how to actually go ahead and implement this. So let's see how this turns out in the coming year. But the concept, of course, it's a very novel concept, and which is going to actually aid us to reap our demographic dividend.
Yeah, sir. This is totally a noble cause, and I feel that if this scheme works out well, it will surely ensure a more skillful youth which get
Yes,
better employability.
definitely.
Okay, sir. Yeah. So now I have one question which is not related to the budget, but
Yeah.
you must have seen that recently there have been lot of online scams, frauds happening. So how do you think that government can tackle this problem? One is by increasing awareness, but don't you think that like there are not enough, we can say, action taken against people who are committing such frauds? And what is your take on that?
Uh, let's categorize these frauds first of all. Okay. And because there are different players involved, if it's a government system where some fraud is happening, it can be a scenario, or it can be some corporate or public sector enterprise where some fraud is happening, or it can simply be you and me as normal citizens of the country who are victims of some online fraud or some cyber fraud. The parameters, the modus operandi for all these things are different. And the stakeholders concerned, the governing authorities, the regulating authorities for all these three scenarios are different. So, on the very first instance, if it's a government system or a government portal or a government IT platform ecosystem, the regulation is done by, there is a nodal ministry called Ministry of Electronics and Information Technology, which is coming up with guidelines for to be followed by all these government systems. There is a computer emergency uh, certain response team, CERTIN, certain, which is a body within the Ministry of Electronics and Information Technology, and it's the apex body. It reports to the highest levels in the country, and they are the ones who are responsible for uh, publishing the standards for government systems, ensuring that all government systems are adhering to these standards, so that instances like frauds do not occur in the first place. Now, it's not like they are operating in vacuum or issuing these guidelines in vacuum. No, there are extensive red team and blue team exercises done. There are penetration testings of these IT platforms done to find out the vulnerabilities. These vulnerabilities are published, informed to all the IT controllers or the IT owners in across ministries and departments, and compliance is sought. So there is an ongoing mechanism which always keeps happening against these cyber vulnerabilities to avoid such kind of frauds or hacking attempts and everything. Now coming to the second scenario, which is a corporate or let's say a bank, which is hit by a malware or a ransomware. So for them, the guidelines, the regulator body is different. For a bank, it would be the Reserve Bank of India, which would be publishing the standards or the minimum prescribed levels which the banking financial systems have to adhere to. Now, this can be through various things, that your CBS have to have this version of the software, your CBS should be secure, or in case of, let's take the example of Aadhaar, which is a semi-government kind of a thing, an autonomous body, UIDAI. They are regulating the uses of Aadhaar, how it can be used, the places it can be used, for what purposes it is being used, all these things, and in the manner in which it is going to be used. Can you store an Aadhaar number in your database? If you're storing it, how you're going to encrypt it? All these things are governed by these regulatory authorities across the spectrum of corporate public sector users. Now, for you and me as normal citizens, of course, the awareness matters here in this aspect a lot. In our country, we still have a large part of the population. For them, using the internet is simply just opening Facebook or opening WhatsApp and not beyond that. And Twitter something is something which is mostly limited to tier one cities, in my experience. You would not see lot many Twitter savvy people sitting in tier two or tier three cities or in the villages of our country. So for people like this, if an access to internet banking is given, and which is now a must, all the banks are giving it left, right, and center to any account open. So they might not be totally aware of the ramifications of sharing their password, sharing the one-time password, or sharing their card number, sharing their account credentials. And this is where the user literacy part comes in. And to that effect, it has to be a concerted effort between these financial institutions like banks and the government. So government has various welfare schemes. Ministry of Electronics and IT runs some schemes such as e-Disha, for which NILET is an implementing agency. And for that, the scheme, the government money is actually going into making people IT literate. They should be knowing what are the risks involved in cyberspace, how to operate internet, how to open a browser, how to have an email account, how to operate their Aadhaar number, how to get money out using an Aadhaar enabled payment systems. All these things are within the parameters of that scheme, wherein people are being made IT literate. On the bank's part, of course, you and I would frequently keep getting SMSs from the bank. That bank would never ask you for your OTP or for your card number or for your account details. What is that? That is an awareness campaign on part of these financial institutions. So, for the three end users, three different ecosystems, three different regulators, and three different ways to tackle these kind of things.
Okay, sir. Thank you. That's all from my side. And now I would request you if you could give a conclusion on today's topic. That would be great.
Okay, so to conclude, I would be very happy to see more and more of you joining the civil services and actually coming in the Ministry of Finance and working on the budget, actually getting a hands-on experience of how the budget is formulated. Or even if not in Ministry of Finance, all the state governments in India, they have legislatures of their own and they prepare budgets of their own. And that is dependent on the union budget in many aspects because not much of money is flowing from the center to the states. So budgeting as an exercise is quite interesting in itself. And for your group or society which you have in college, Nivesh, finance is of even more paramount importance. So all the best to all of you to actually come up with such sessions and such interactions. And happy to always come down and talk on these topics. And any help to all of you to actually come up and join the government, more than happy to do.
Yes, sir. You have been very cooperative throughout the podcast and you gave really good answers.